Good afternoon, traders. How we doing out there? Who's ready for another stock market movers where we get through all the headlines that are out there and of course keep you guys in the informational edge with our expert opinions. That's what it's all about here on this show. Let's talk about the topics that we got today. We got oil news. Are we lost? Fed talk, Nord Stream 1, BBBY, CrowdStrike, ChargePoint, HP, Hewlett, Packard, housing recession, Baidu, and RoboTaxis. We got a lot to talk about. We also got, of course, our expert opinions that will be coming on today. We try to get to some experts like always. Today at 1:15, we got Matt Smith, lead oil analyst at Americas at Kpler. And we got, of course, Christopher DeMuth back, hedge fund manager at Rangeley Capital. We'll see what happens with, of course, we'll talk to Christopher about some kind of fun talk with Twitter. We'll see what happens and what any updates he has for us in kind of the Elon Musk saga. We'll find out later today. Let's get right into the show. Stock market movers. Here it is. I'm your host. Let's get it started. There are three ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, traders, how we doing on out there? It's good to see some of you guys in the chat. If you're new to the show or haven't seen Stock Market Movers before, say hello. That's what it's all about. I definitely like to see you guys in the chat engaging with me. And of course, if there's any move that caught your attention and you just don't know why, and you might want to take a look into it, like always, go ahead and throw up those stocks to the on the chat to the left here, and we'll see what's going on, right? I mean, there's a lot of action going on right now. The SPY is still leaking. We're underneath that 400 today. We're going to take a quick assessment of the overall market. Then we'll see. Will we hold towards this 50% retracement? Of course, that's what a lot of people are looking at. We've talked about that right here on Stock Market Movers as we continue to watch the overall market pull on back from those highs where we're up there towards 431.73. Now we're trying to cut through the 50% retracement. Will we get down here into the 390 area and then keep coming down towards the low? Of course, that's what everyone's wondering about. Is it just a cut down of kind of, are we going to cut those lows? Will we eventually get down there towards the 362? That's what investors definitely are keeping a close eye. Now let's go ahead. Let's dive into our first topic. Like always, that's what we try to do here is get through the topics and then get to the expert opinions. First one we're going to talk about is, of course, what happened at 10:30. Let's take a look at XOM today in oil and why oil could be up today. Let's take a look at how it's trading now. XOM now towards 96.68, and I'll say it right now, guys. A little annoyed I missed this trade today. I was not at my seat here at 9:30 today, and I missed this trade on the red to green. Would have definitely liked to get it near 94, 94.50s. Was not able to do so today on XOM, and it's pushing. Let's talk about the numbers that we got. So we got some numbers that came on out at 10:30, and I'll show you guys the 10:30 on the chart here. And so 10:30 is right here. And this is the candle here that when it came out, and you can see from there, we've actually gone up and continued the trend that we had in the stock. You guys can see here, EIA crude oil inventories at an actual loss of 3.326 million estimates. So what's going on here is you're seeing a declining in the inventories. This shows us more the battle between supply and demand, right? And the biggest thing that we've been trying to do, and what have you been hearing everyone talk about, is trying to increase production, right? Increase production so that we can make up for the loss of the Russian oil barrels. Of course, this is not what we're seeing right now. And I think this could cause a spike in oil prices as you're seeing more and more mentions from OPEC about cutting production we'll see what happens. I mean, it really started with Saudi Aramco last week talking about how they thought they could cut production and get this price back on up. It's something that we all need to keep on watch. I will talk about more of this with Matt Smith just coming on up, a lead oil analyst. So let's not get too far into the oil talk today. I just want to definitely at least touch the highlight number today that I thought was very important. Now, the next topic, and this is an important one. And so the question that I asked the chat is, are the analysts and kind of the talking heads out there just lost? And the reason why I say, why are we lost? And with a question mark. Well, comments like this really catch my attention. And I think that a lot of investors were trying to ask themselves, what happened on Friday? What happened with Fed Chair Jerome Powell? Why was it so different than what was expected on out there? Well, comments like this is why I feel that investors really got caught on Friday and now are just trying to play catch up. They're definitely going to be looking at the overhead supply. Any rallies back on up, I think that you're going to see some traders try to lighten up because they probably got caught on Friday. So let's talk about comments like that. So comments like this is what I'm looking at. We think we're close to the end of a rate hiking cycle, but it certainly depends on a lot of things. Brenda, Chief Investment Officer at Sandhill Global Advisors, said on CNBC's Closing Bell Overtime on Tuesday. And I think comments like this is not what we need right now. You know, this is what kind of got a lot of the bulls trapped up at the top, which is what a bias towards the upside and giving out optimistic outlook when really, have we heard the Fed mention that the rate hiking cycle is coming to an end? Have they even hinted towards the rate hiking cycle coming to an end? No, they have not. This is just assumptions made by analysts out there that they could see maybe the benchmark at 3.5 versus, let's say, the 4.0 or the 4.5. I think this is something that we all need to keep on watch. Comments like this is how you get trapped into thinking straight back to the upside, right? And I think that, you know, not saying anything against Brenda here and making those comments. Of course, she was being bullish here on that she thinks that the rate hiking cycle is ending. But I don't think that's the comments that we got. The Fed clearly stated that that's not what they're going to. They clearly stated that they're in kind of in the middle right now in their policy. They're not being restrictive. And they're not being supportive, stimulative towards the economy. But now they're going to go ahead and move into restrictive. So if anything, there's some more rate hikes coming. And then what have you been seeing from the CME Fed tool? And what you're seeing is more odds for us to get more of these hike rates going into 2023. And so to say that the rate hiking cycle is near the end, I think this is kind of misleading, at least to investors out there. So just keep on watch. We'll see what happens. Of course, the Fed will tell us what they think coming up on the next FOMC meeting. That should be on the 21st of September. So we'll definitely keep watch what happens there. All right, let's go right back into it. In a second, we're going to dive into it with our first interview going into oil. But I just wanted to take a quick look at the overall market to see what was hot today, what was not. Let's take a look right quickly. So you can see here right off the back, and why I wanted to touch it is you see energy leading us today, right? But it was actually down big here in the morning, right? And it just rallied back on up. This is why I pay attention to the percentage change open daily. From the open, how did the sectors perform? You can see here energy up 2.43% from the open, showing me what? Relative strength here coming into these oil names. Now it's interesting. You're seeing XOM up about 0.45. Chevron's actually still down on the day. It still hasn't even clicked into the green. ConocoPhillips taking a nice step on up. These are all stocks that I've been looking at, and even Oxy coming on back here today. So definitely something to keep on watch. Excited to jump into some oil talk. So let's go ahead. Let's not waste our time. Let's get right into it here. We're going to bring on our first guest. You guys do me the favor. Hit the thumbs on up if you guys are excited to talk a little bit deeper into oil. All right, I got Matt Smith here, lead oil analyst at Americas at Kpler. Welcome back on, Matt.
Thanks, Mitch. How you doing?
It's good to have you on. And, there's a lot of oil concerns out there. Everyone's watching to see what has happened. So for some of us that might not keep up so closely with the oil markets, can you just give us like kind of a latest recap on some of the recent movements and catalysts, what you have seen out there?
Yeah, absolutely. So big picture, oil prices have come off about 25% from the highs in mid-June there. And so what you've seen is that's been in part driven by recessionary concerns, particularly of late. So as we've seen the equity markets coming off, crude prices have got swept up in that kind of negative sentiment. But you've also had a lot of bad news out of China in the last month or so. So not just in economic data, but you can see it in their crude import flows, in their refinery runs being really low. So their demand is low. And China is so key is because it's one of the world's largest or the largest importer of crude. It's the second largest oil consumer in the world behind the US. So yeah, the US administration has been so concerned about gas prices, that price at the pump, that tight relationship there, tight positive correlation means that as we've dropped sort of 25% on that price of oil, we've seen an equivalent drop at the pump too. So we've gone from sort of $5 a gallon, all-time record level there mid-June, and now we're down to about $3.85, something like that. So that's kind of where we are. You've kind of got this bull and bear kind of thing right now, Mitch, in terms of the recessionary concerns still weighing on prices, but looming in the background and on the horizon is sanctions from Russia or on Russia. And so that's kind of where we're sat right now.
Yeah, I mean, of course, if the Russian situation wasn't going on, I don't think we would be talking about the same things that we're talking about here. Now, we just got recently today, the crude oil inventories coming in at a minus here, 3.326 million. What does this mean for oil prices moving forward?
Yeah, sure. It was really interesting when you were showing some of those equities just before there, where you were showing that we've seen the relative strength through the day here.
Yeah.
That was really because we saw oil prices really starting weak, and then it kind of rebounded and were coming back through the open. Then we had this report at 10:30 Eastern time, and that draw was supportive. And so we've seen oil pairing losses, and that's why you've seen these some of these oil equities going into positive territory here. The wild and wacky thing in the oil market this year, I would say, is that the US, because of concerns about Russia and high oil prices and high gas prices at the beginning of the year, they decided to tap the US Strategic Petroleum Reserve, the SPR. From that, they have taken out 143 million barrels, and that's essentially been transferred into commercial inventories here. But the thing is, people look at that commercial inventory number. That was the number that you just quoted there. And people are seeing it holding basically flat since the beginning of the year. But that's because we've had 140 million come out of our strategic reserves. And so we've dropped from like 590 down to about 540 there, 440, sorry. And so the worry is that you're going to see these SPR releases stopping in the next month or so, which is interesting with the timing because it takes us straight up to the midterm elections there. I think that was why they decided to do this, to try and keep prices down. But once that kind of that is taken away, that influence, that's the concern that we see prices moving higher after that because of that lack of supply. And that what makes the Iran nuclear deal so interesting is that could be brought on and more barrels brought back to the market by Iran just as the SPR drops off here.
Now, of course, recently there's been talks, and I think everyone's waiting to find out really what OPEC Plus will do. But there's been talks of supply cut, right? And if we are going to get kind of those production cuts, what will happen? Will we get another kind of massive ramp in the price of oil? Of course, the battle comes here now is probably they're thinking about what's the price level that we can get the maximum out of it. Do you feel that we're stuck in kind of more of a range here, or there's really the potential for a breakout back to the upside?
Short answer is there's the potential for the breakout up to the upside, particularly with Russia coming through later in the year here in terms of sanctions. The reason, though, that OPEC was talking about that supply cut seemingly was because in response to developments on the Iran side of things. And so, obviously Iran and Saudi Arabia are adversaries. The US went to Saudi Arabia, asked them to increase production. Saudi Arabia didn't increase production or do it further more than as much as the US wanted to. Then the US is again seemingly engaging with talks with Iran. So then Saudi comes back and says, well, maybe we'll cut supplies because there's some recessionary concerns here. When really they're saying, maybe we'll cut supplies because you're going to put more oil from Iran onto the market here. So there's seemingly a game of chess that's going on here. But bigger picture, to your point, is that you're in a fairly sweet spot where we are here now for these OPEC producers, because it's above their budgetary needs for the vast majority of them anyway. And so at the same time as well, they do want to push that price a bit higher because we don't get demand destruction, or it's unlikely until we push up to where we were back in sort of mid-June around that 120 level. So a lot of things going on in the background here, it would seem.
Yeah, the battle's on right now. The bulls, the bears, and oil. It's definitely a battle on out there right now. And I mean, a few weeks ago, or it might have been even a month ago, there was a lot of talk of Russian cap, right? And we were going out there kind of talking about a cap on that oil. It seems like no one really caught on to this, right?
It never made any sense, right? Because for all the best wills, for everybody else, to go to Russia and say, right, we're going to cap the price of the oil that we're going to be buying from you, you're never going to get Putin to agree to take a price drop, essentially. And so it never kind of made sense to me that a price cap could ever be implemented. We're already seeing Putin and Russia weaponizing natural gas. So, for example, right here, just right now, today, we've seen them cut flows through the Nord Stream pipeline, which is the main thoroughfare to take natural gas from Russia into Europe there. At the same time, too, sort of last week, they'd already cut the capacity on that pipeline to about 25%, something like that, versus what it was last year. And they were flaring the gas, which is so essentially lighting it on fire and just burning it off rather than sending it into Europe. And so there's that weaponizing going on there. So given that backdrop, how on earth can you expect that Putin's going to take a price cap of it being reduced down to his cost, like $55 or something like that? It seemed a little ridiculous there.
Yeah, and I'm sure investors are questioning, how is Russia getting through this time, right? I mean, how are they doing this?
No, but all you have to do is look at the price of natural gas in Europe there. And so they're not supplying as much, but the price has gone through the roof. So they're still bringing in those revenues. And so you can look at recent months or that. And as prices have been so high for natural gas, for oil, they're still making as much money. And let's not forget, though, on the oil side of things, there really hasn't been too much of an impact. We have seen a change in flows. They have had to discount their oil that they're selling into Asia rather into Northwest Europe, but they're making up for that with just that higher outright price of oil anyway. And so that's how they've managed to get through this. So the concern going forward here is that, it shows that by weaponizing those commodities, it's keeping the price up, it's keeping their revenues up. So we should expect this to happen going forward here and escalate as more sanctions come into place.
Something that we'll all be watching now. Let you get the floor here. What should investors watch moving forward from this data? What is going to be coming on up so that we can be in tune with the oil markets?
Well, we've got the peak of hurricane season here in the US that's coming up. The peak is actually on a week on Saturday, when statistically you should have a named storm in the Atlantic there. If we do see it come into the Gulf of Mexico and make landfall in, say, Texas, it could hit those refineries. And what that would do is drop the price of oil because it wouldn't be being refined, and it would boost the price of gasoline because there would be a lack of supply because those refineries aren't working. So that's one thing to watch out for. Obviously, the recessionary concerns are another thing too. And then just after hurricane season, seeing how things play out as we get through September into October, whether we have a cold start to winter there, that's really going to wreak havoc and cause mayhem in energy markets, given what it's going to do to Europe. And so cold start to winter is going to be the real concern, because all bets are off then.
Well, the chat's loving this, Matt Smith. I just wanted to let you know, chat definitely giving some feedback, great information for us. So thank you for coming on today. Matt Smith, lead oil analyst at America Kpler. We'll definitely have you back on.
Thank you.
Of course, Matt. All right, there's that first interview. I wanted to get into oil. You guys know how I've been keeping up on that. I feel like that's, it's hard to stay away from that trade right now. For a long time, I didn't trade oil names, but in this environment, it's just been one of those names that I feel like I can't go away from. And it's something that I'm going to keep on watching. Like always, you guys can keep up with it right here on Stock Market Movers. And I'll make sure to kind of reach out to Matt next week when we get maybe OPEC plus comments to see if we can get some comments of what he thinks happens from that meeting. All right, let's continue moving forward. Let's get into some other topics that are out there. I am watching that UNG pop. Did you guys see that right now? I've been trying my best not to stay on it because, full disclosure, you guys know I've been long since before the show yesterday. So it's not like I've been going in it right now. But let's talk a little bit about what and why you could possibly be seeing natural gas taking off here. A lot of this is all on the Nord Stream pipeline shutting down for maintenance, right? Everyone was watching this. This is something that was given to us ahead of time. Now we need to go ahead and start asking the questions, right? The questions start asking, now, will it come back online? Will Russia continue to use energy as a weapon for war? That's what we are all starting to question. And of course, Gazprom previously said that the gas transmission would resume at a rate of 33 million cubic meters per day. I think this is an important number to kind of know so that if it does come back online, you can instantly look how much has come back online and see if they resume the rate at the rate that was set. Another thing is to remember that Russia has already played this game, right? When Nord Stream 1 pipeline came back online just a few weeks ago, it was operating at 20% of its agreed upon volume. Well, we'll see what happens here. Definitely getting a little bit of a spike there. We'll see if it can close back above 32. I've been keeping an eye on, and just so that we don't get just only on UNG, let's take a look at Boyle. This is another way that you could maybe looking at this natural gas trade. Will this come back up towards those highs here in June 8th? That's what I'm going to be watching. We'll see if it can really take off. You can see Boyle also had that spike there. This is the 15-minute chart. So let's see if it really can get back towards the highs that was from Friday up there towards 114. That would really show us a takeoff here. But we aren't going to really find out until it goes to reopen, right? Once you go to reopen, pay attention to see if you get those 33 million cubic meters, or will it come down lower than that as they tighten up the spigot and kind of weaponize natural gas some more. We'll see what happens there. Nord Stream 1 shut down for maintenance. Can it bounce back? We got to keep an eye on it. All right, let's keep going here. Let's go towards the next topic. We're going to go into BBBY, of course, coming down fast in the pre-market. And why did this happen? Well, Bed Bath & Beyond, late to the shelf offering, securing $375 million loan. But, I mean, come on, guys. You guys couldn't get this together when it was up there at 22 or 26. Now you want to get this together when it's down here towards 12, 13? Just not what I wanted to see there from the leadership of that company. Bed Bath & Beyond dropping fast on that shelf offering. They talked about in a filing on Wednesday that we may offer, issue, and sell shares of our common stock from time to time. Bed Bath & Beyond also said that it secured a $375 million loan. The company said that it's planning layoffs and store closures to cut costs, and is part of more than $500 million of new financing, which includes an expanded $1.13 billion in asset-backed revolving credit facility. We'll see if they can even get a bounce here. To me, it really shows concern here that it came down that quickly with mentions like it did. And it just shows me that with them talking about, closing stores, cutting jobs, and really cash concerns. I mean, they did just get this loan, but the reason why they got this loan was because of the cash concerns. And so in the long run, I'm definitely still bear on Bed Bath & Beyond, just because right now I don't see them coming back. Even if they could get a rip, how long will that keep this company around? I just don't know. All right, let's get out of BBBY talk. Let's keep going in the markets. Let's take a look at what was hot and what was not. We already talked about oil, so I'm going to try to do my best not to go too much into oil. We'll take a look at somewhere else in the market. What was weak today? Let's go ahead. Let's dive on in. All right, let's go towards that. Like always, guys, you guys know I like to keep up with the sector and industries. So energy, I'm not going to talk too much. You guys already have heard enough about that. Let's go to utilities, which is the second leading sector and the only other one in the green from the open. Of course, this doesn't mean that it's, deep into the green. It's only up 0.11 from the open. But let's see about what was good here today. Well, it looks like independent power producers. That's the industry that we wanted to be in today. And what did well here? Well, you got some of these like CEG. I don't even know some of these. I'll just be as honest as I can. Some of these are not stocks that I know. But if I see a daily setup like this, and this looks interesting to me, we have some levels that we've tried to come through. We went through it here on Thursday and Friday, got that hard market pullback that caused this really hard pullback. I'd be looking for it to take out those highs or those closes, which is 80.83, and the high there is 83.23. So keep your eyes on this. This looks interesting, especially around the 82.75, going towards the 83. I'd put a radar on this one and definitely keep it on watch. Put an alert and see what happens, right? We could also keep an eye out on some other kind of higher cap names here. BST trying to make its move right back up. BEP. I don't know these too often, and that's how you can find stocks working backwards. So I'm going to keep these ones on my radar. One thing that I can clearly see, this one had gone up, pulled back here. Now could catch support around the 50-day moving average. 200-day below it, definitely in a bullish trend still, could catch that bid and come right back on up. Of course, I've been watching some like XL Energy and NEE, Duke. These like to pull back, but they also like to trade in a kind of sideways channel. If you take a look here, look how long this has been trading kind of in a channel and has continued to trade in a channel. So when we're at the bottom, we can look for those kind of dip buys. When we're at the top, we can look for a reversal in a lot of these utilities. So it's not a bad way to take a look at utilities if you're trying to trade them within the channel, catch them on the dip and sell them on the rip. All right, that's going to do it for the utilities talk. Let's go towards what was hit the most. Technology getting another hard hit down. So you guys know I've been talking about this stock consistently when I talk about technology, is just looking at NVIDIA and using that as my radar right now. Look how NVIDIA is cutting through the lows again. Yesterday's lows being 151.82. Today, we're already down there towards a low of 149.76. Just shows me continued weakness in semiconductor names. Yesterday, I gave you guys the Citi note that said 20% down further on semiconductors. And here you guys see the industry outlook on semiconductors. And it looks very similar to that NVIDIA chart in my eyes. And so that's why I'm watching these two very closely together. AMD is another one that you can use as that kind of bogey to tell yourself, is technology going to keep leaking? Well, I'll just look at NVIDIA and AMD, and if they tell me leak, well, I'll just kind of expect on what is going to keep coming. Of course, you guys can try to play the opposite of these to the bullish side. I've talked about success plenty of times, guys. We were looking at this area on Thursday. We played this multiple times on live trading lately, and this is more of a daily out trade for us. But look how this is continuing to push and now starting to get above the 200-day average, showing us more and more that those semiconductors look like they're going to continue to leak. We'll see if they get a turnaround, if they can or not. All right, catching up with the chat out there. What's going on? Jay Rice, Jeff Ross. I'm in on the UNG move, moving my stop loss up for profit and still riding. I hear you, Jeff. I'm doing the same. Jeff. Just moving up my stop and trying to keep riding the wave. I'll let you know if I do get out, but it probably won't be during the show anyways. I usually set a stop like you did right there and just try to let the stock work for me. All right, we'll see what happens on out there. Commodities should be first to rebound other than bonds. Good mention there, Easy. I've been keeping my eyes on stocks like wheat and corn and soy B. We might actually have to go ahead and bring on the Tucrium fund back. We had them on a little while ago when wheat was kind of coming down. Now we're finding a little bit of a bounce. Interesting level to watch now. I'll be watching if we can get back up above the 870s here. And I'm even going to set an alert on here because I want to continue to watch what happens here in the wheat situation. Will we get a spike again? One thing that also points to me towards the upside is on that spike, we got a lot of volume. So it's okay to get that inside day, pullback day, and now look to see if it rips in the next day or two above that 870 going towards 9. We'll see what happens. Definitely keep it up. They let us up and they let us down. I agree. Something that we need to keep on our radar. All right. Consumer cyclical also kind of coming back down here and continuing to move back down. You can see here, reopening trade, apparel manufacturing, apparel stores, footwear and accessories coming back down. The Foot Locker is one that has been interesting. It's been holding sideways here. Will it kind of come for this gap down fill, the shadow fill down? I'd keep my eye on that because if it does come down, it could crack into the 32. We'll see what happened there. All right. And technology also started seeing that solar is still hanging on here. Look at First Solar up 5.36%. Sun W up big 7%. And Enphase actually slightly in the red today. So just keep your eyes on solar to see what happens in that. It's been big movement lately in solar. All right, keeping on going. Let's take a look now into the earnings stocks of the day. Let's go to CrowdStrike. Sorry about that, guys. Just give me a second. All right, let's keep going here. All right, CrowdStrike coming down here with their earnings, and man, they got the rug pulled today. Let's talk about their earnings and what they got on their numbers. All right, CrowdStrike coming in here at an EPS of 36 cents, beating the 27-cent estimate. Sales also beat at 535.2 million versus the 515.42 million estimate. CrowdStrike sees Q3 adjustment at 30 cents EPS on the low end, 32 cents on the high end versus 28-cent estimate. It really wasn't a bad earnings report, but as you guys can see here, CrowdStrike just getting hit hard today in software infrastructure. I'd like to take a quick peek at PanW. Palo Alto also turning around today. That could have given us a little bit of a hint. This was holding on for a little while. And now I'll look to see if PanW is going to go ahead and kind of fill that gap right back down into that shadow zone. We'll see what happens. As CrowdStrike was looking good, but just couldn't catch the bid today. And now starting to really crack here. And one thing that I could see here on the daily, you had kind of this trend. You were trying to get back through that 205. It rejected right here to get towards that 200 yesterday. On Tuesday, you got to 199. And now it's looking like it wants to head down fast. I'll keep this one on my radar as it's coming back. Could be coming back towards around the 150s, 170. We'll see as this kind of stair-stepped up, but now really gave you a hard candle towards the downside. We'll see what happens there in CrowdStrike. All right, keeping on going here. Let's go to Chewy. Chewy is one that we wanted to take a look at. Of course, we were watching this one as it was coming on up here through the 48. Eventually, we saw this crack here. We created this on August 19th, the crack of the trend line, and you can see it here. That was right here when we were cracking. I was looking to see if we were going to start using that as resistance, and that's exactly what we got here on that Tuesday 23rd. Used it as resistance and then just started rejecting down here. Now, will Chewy catch the bounce? I'm not so positive about that, but who knows? I mean, one thing that I will give you is the insight that they gave in their earnings report. They said a warning to customers are pulling back on spending. Chewy came in at an EPS of 5 cents, beating the loss of 11-cent estimate. Q2 sales at $2.43 billion, missed a $2.48 billion estimate. We'll see if it's able to catch that bounce. Definitely has been rejecting since that 44 level. We'll see if it just starts coming back down towards these lows and takes out the June 1st low, or actually it's going to be more of the May 24th low or the May 25th low. We'll see if it gets down there, 22.65, 22. So we'll see if it goes and takes that out. I mean, there's a lot of these charts that you're going to be now looking at their 52-week low to see if they're heading towards it or not. What would be a nice move for Chewy? Getting back above the 44. You see the 200-day moving average right there, 50-day above it also, and the 9 EMA above it. Shows me more and more how the price action is moving further away from the moving average and falling down. Price action being brought down here. All right, getting out of Chewy here. Let's go to ChargePoint. This was one that I wanted to watch today to see if it was going to give a nice breakout level. The 16 was standing out to us. Let's take a look at ChargePoint here. Their EPS coming in here at a loss of 28 cents, down from a loss of 13 cents year over year. Sales at 108.29 million, beating the 103.97 million estimate. They see Q3 revenue at 125 million on the low end to 135 on the high end. The estimate was at 130 million. Now they do see full year 23 revenue at 450 million on the low end to 500 million on the high end versus 476.47 million estimate. We'll see if ChargePoint can hold here the 16. For me, if it can close above the 16, this is looking good. You start getting the 200-day at 1588, right? You get the 9 EMA right below that at 1555. You have the 50 down towards 1463. So now you start looking to see if that 50 can make that cross above the 200 with the price action also moving in that same direction. That's going to be a good look for it to come back. We'll see if it can get back towards, let's say, 18, 19s, and then 20 will be a definite price point to watch. If it can get above that, you start getting out of this kind of down price point. And you can see it had a long kind of move down and has just started shaking it. We really need to get it above 20 to get out of kind of this bearish pattern and start getting into more of a bullish outlook. Of course, ChargePoint started moving when we started talking about the Inflation Reduction Act, but ChargePoint's not moving by itself also. Take a look at other charging stocks like EVgo. Look for these to kind of follow along. The leader for me is ChargePoint, but I'll also be watching kind of laggard action in EVgo, or you could also watch the laggard action in Blink charging. So all these are going to be kind of moving hand in hand, and I keep my eyes on all of them to give me a little bit of more insight on these charging stations. But definitely ChargePoint to me is the leader. Good day for ChargePoint, getting above the 16, and you could see it on the daily. It was definitely some big resistance there. Pushed above and held the first pullback here. You can see it went to 1592, reclaimed that 16. We'll see if it's able to close above 16. All right, last one we'll touch on the earnings end is HP. Let's go towards it. That's HPQ. All right, you can see it pulling on back today. It did have a little bit of a spike here at the open, trying to come back towards some highs, and then just started leaking back on out. Let's give those numbers here. Q3 EPS coming in here in line at $1.04. Sales at $14.7 billion, missing the $15.70 billion estimate, lowering full year guidance. EPS at 79 cents to 89 cents on the high end versus the $1.06 estimate, and full year 22 EPS at $4.02 to a high end of $4.12 versus the $4.30 estimate. So definitely missing those estimates there. And you guys can see it. It had a pop and then just kind of faded away. We'll see what happens on this one. Doesn't look good on the daily. That is definitely a long-term break of trend. And when I see those, the longer the trend is, when it breaks, it could keep falling. Now we could start taking a look at kind of maybe a weekly chart or monthly chart outlook to see where we could find some support. Of course, you guys can see here, there was some support around the 27.36, or maybe you're just pulling it down towards the 27. We'll see if we're able to find some support there and see if HP can bounce, get back up towards that uptrend. If not, it could keep cracking down. We'll see what happens. A lot of this is kind of more demand for computer systems. Will that kind of come down? It's looking like it, right? I mean, at least the price action's telling us that. We'll see if this can turn back around. All right, that's going to do it for us on our earnings stock. We're going to go into our second interview. Like always, that's what we do here on Stock Market Movers, trying to get to the expert opinions that you guys want to hear from. to stay in the informational edge. That's what it's all about. You guys heard me talk a lot about oil earlier. We talked about some of the Fed talk, Nord Stream 1. Now let's get into some fun topics here. All right, we're going to go ahead and dive into our second interview here. Do me the favor, guys, if you guys are enjoying the content today, hit the thumbs on up. All right, let's bring on Christopher DeMuth, hedge fund manager at Rangeley Capital. Welcome back on, Christopher.
Good to be here. Thanks for having me on again.
Definitely excited to go ahead and dive on in. Now, first thing, I just want to kind of talk just overall market. How do you been feeling about this overall market? Has it put a little bit of worry into you as an investor, or are you kind of more in the page that, hey, these are moments that normally happen in markets and are opportunities for us as investors?
The latter. I think I feel great about what I'm doing. What I'm doing is not always on the long side, and what I'm doing frequently has some sort of corporate catalyst kind of looking bottoms up, where ideally we have both a fundamental underpinning for what we own and a corporate event where our upside is going to be determined by the success of that event. The downsides can be protected by fundamental value. And we're very exposed to being right frequently enough. Maybe 2 out of 3 times is usually enough for a very good year. It's not based on precision as much as based on underpaying. And if we underpay enough for individual securities, the market overall can do whatever it wants across a credit cycle. Now, day to day or week to week, we can be pushed around just like anybody else can. But perhaps sailing is an okay analogy, that if you're crossing an ocean, moment to moment, the wind matters, and moment to moment, the weather matters. But it's kind of a stupid thing to fixate on too much. You're going to get all sorts of different environments. And if you make high quality decisions, that will catch up with you over time.
Process. We talk about it all the time on our live trading stream. And that's really what it's all about as investors, traders, swing traders. You have to have your process. And if you can always come back to that and focus on that, that's probably going to lead you to more success than the latter, right? Let's go towards another area now. I have seen that we can dive into what Boeing supplier here. I think that's interesting, right? Let's dive a little bit into AirSale, and you guys can take this look at this stock also. That's ASLE if you guys want to kind of follow along on the story. Tell us a little bit more. I know there's a new product release, which is called the AeroWare. Tell us a little bit about this and why it's important for Boeing.
There's 2 things that have been on my mind since last we spoke. I think last time we were talking quite a bit about Twitter. At some point, we can kind of go into that too as an update. But the 2 things on my mind, Amplify and AirSale, both have the same quality, that they have kind of more than doubled since we were involved, but I think they could double again from here. I think that AirSale is an example of something where fundamentally their current business, they're kind of MRO. They maintain airplanes, typically midlife airplanes. They can change them from one purpose to another, so you can take a passenger jet and turn it into a cargo plane or vice versa. And they are extremely savvy about pricing parts. So it's kind of like a sum of the parts valuation of an physical aircraft. They know what to pay. And they can do it with just incredible economics at the unit level, just incredibly adept at paying the right price, using it for the life of the airplane, then using it for the parts. They have a very good relationship with the regulators such that they have kind of approvals for all the things that they do, which creates very high barriers to entry. And it's worth $20 a share as it is if nothing happens. But nothing's not going to happen. What's going to happen is there are many signs that they're going to imminently get approval for AeroWare. AeroWare is their most exciting manufactured product. It's kind of this really cool heads-up display for commercial pilots to use something that has historically been kind of a very top military technology, so that you can see through weather, and it's a very good product to sell from AirSale's perspective, but it's just a cinch from the perspective of the airlines. They're going to save money with this thing. They're going to be able to stack planes tighter, and they're going to be able to fly through a lot more weather and land as opposed to just circling around burning jet fuel. So I think they're going to get a huge order from United, UAL. I think that they're going to become almost ubiquitous amongst a lot of the carriers. If you look at the regulators are pushing this. They're going to, at some point, require it. The things are happening that are kind of last minute things. They haven't been able to announce something formally, but informally, they already have a contract with the people they're manufacturing it with in Israel. And it's kind of moving forward to an announcement. Between this and the other thing I want to talk about, Amplify, I think kind of one of these two might happen by the time we next speak, but it's a small issue for Elbit, the company that's manufacturing it. They don't endlessly care because that's a huge company, but AirSale is a small company. AirSale could double on this thing. I think the product itself is worth at least as much as the whole rest of the company combined.
Interesting, Chris. Now, would also Airbus be involved in this, or is it just more for Boeing?
No, it's not specific to the manufacturer. No,
Okay.
it could be a relevant product for. I mean, the major customers are going to be the airlines, but it can work with either Airbus
Nice.
or Boeing.
Definitely interesting. And we have been seeing like Delta Airlines kind of making some purchases and kind of getting back into the investments. So I think this is definitely something that we can keep our eyes on. Let's go towards.
I think Delta could be a big customer. The other thing that's relevant is if you look at the JETS index, I think that they now qualify for the index. I think it's a likely index addition. It would be a smaller component of it, but especially they had a large private equity kind of group that had a residual position, Leonard Green, that's selling it down through secondaries. As they go down, I think the volume and liquidity is really going to pick up of AirSale. But I think once they get this airware product, it's going to be kind of the double whammy of get the product, get it on the market. I think it's fabulously valuable to them, and I think that they're quite likely to become a JETS component after that.
Well, thank you for bringing us the story of that new product. And I think we'll all be kind of keeping our eyes on that ASLE. You guys can watch. Let's go towards the next one that you wanted to talk about, which is Amplify. Let's talk about this. What recent updates or what can you kind of tell us about why we should be keeping our eyes on it?
This is one of my largest investments. I guess disclosure, we own all of the things we're talking about here. It's one of my largest investments. It's more than doubled since we've bought it. It's another situation that kind of gives a little bit of a window into what thematically I want, which is if I'm horribly wrong, I want to kind of break even, maybe, tie. I want to get my money back. I want to never lose a lot of money in these positions. So I want something with really kind of fundamental underpinning. Now, you have to look at any oil and gas company relative to oil and gas. Oil and gas here is a spectacular bonanza for them. Oil and gas at 80 is spectacular bonanza for them. At 60, it's okay. Once you start creeping south of 40, that's where it's like, okay, that's going to have a big impact on us. So we're not insensitive to the price, but it is such a valuable company. It is such a cheap stock that anywhere near the current price, you find at half the current price, is fine. That's not what I'm speculating on. I don't have a oil and gas kind of view that is what draws me to this. What draws me to this is it's a really cheap stock with really good assets, and that they had this pipeline disaster that they are on the cusp of solving a lot of the problems to get it back online. If they can get this beta pipeline back online, and they just in the past week have kind of rolled out settlements on liability. They're then going to go after the people who caused it, which was not the pipeline people. It was the ship that dragged an anchor over it. And we're going to claw back a lot of this in insurance and claw back a lot of this in terms of a settlement or a win in terms of the people who are actually liable. But you get this thing back on, and it is going to not just be piping oil, it's going to be piping a lot of cash. And in fact, enough cash that they can go from very highly levered to not levered at all in the coming quarters. You're going to own this thing free and clear, an unlevered oil and gas company that's going to be able to pay off its debt, and it's going to have the hedges roll off. So we're actually kind of hedged now, but a few quarters from now, you're going to have hedges rolled off, you're going to have the debt paid down, you're going to have beta back on. And then it's a bit of a hodgepodge of assets. So does it make sense to sell it in parts or in whole? But I would say that this is another one that's kind of a double from here. I think from $7.50 to $15 a share, it's a very clean shot. And that just requires some stability in oil and gas with upside if it's better than stability. And when I say stability, I mean stability from 70s or 80s. I have no need for spot to stay as elevated as it now. If it's better than that, then the stock's better than that. And at that point, it becomes either asset or a whole company deal target. And so there's upside from there. There's no reason for a company the size to be a standalone public company, but I wouldn't want to get paid a discount for beta. I wouldn't want to get a discount for the leverage. I wouldn't want to get a discount for the hedges. So let those things kind of clear out, and it is a multi-bagger from here over the next year.
Interesting to watch. And there you guys have the story and some of more of the fundamentals that is what Chris is really pointing out here that makes sense for the company. I think this is a great one to watch. And I myself am going to add this to my watch list just to watch as the stock develops. But it's something that I will keep an eye out. I like finding out stories like this. And it's definitely when you drive into this kind of environment, we really need to understand the fundamentals of a company. So it's definitely one that we're going to keep on watch, and we'll see what happens in the situation with, of course, if they can get that ship to kind of pay on up there after dragging that anchor.
We will.
Yeah, and then who knows? Maybe it sets an anchor in this stock and it really kind of gets it going. We'll keep watch.
I don't know if you had any time or interest to get a little Twitter update, but
yeah, let's do it. Let's do a little Twitter update.
Just since we discussed it, and I thought we'd put it to bed, but you can't put Twitter to bed. You can't put Elon Musk to bed. Like
no.
You go to bed, you wake up, and there's kind of a lifetime of developments. Twitter has a whistleblower that fits in with some of the themes that Elon has been making, although fits in very awkwardly with the actual legal case he's making, in that the whistleblower, like Elon, thinks that there are things at Twitter that should be done differently, which in a sense makes sense if you're a potential bidder, and it makes sense if you had the role that the whistleblower had, which was largely to fix the things he claimed needed fixing, but instead of fixing them, he left and then complained about it after he was fired. It's serious. It's not something to be dismissed. But it's much more serious from a business perspective than from a contractual perspective. It remains the case that there is a strong contract in force with a $54.20 cash deal that Elon Musk signed. And it is also the case that Delaware takes such things very seriously. So the likelihood that remains the outcome, I think, is extremely high. Or a settlement that's a facsimile of that expected value, which would be vanishingly close to that price. Now, the business problem this company seems to have, if something else happens, is pretty aggressive. So people, without pointing out specific options contracts, I just point out for people who think about options, if that's wrong, it's really wrong. It's not something that kind of goes to 40 or 30 or 20. I think it's something that could go to 15. I think it is a dramatically bad outcome, especially if it breaks for material adverse change that the court has identified as such. I don't think that's going to happen. I don't think it's a close call. I don't think they're going to have a hard time reaching that call. But the inverse of this thing working is it really failing big. But I think that the court case currently in October, some shot it gets delayed, as Elon Musk would like, until November. Again, affects people with options, maybe more than equity. It's still a fairly fast process. And I think that Musk still has an uphill battle, although one that's gotten more subtle and interesting and complex since we last spoke.
Yeah, I mean, the whistleblower, to me, I felt like it kind of pointed more that, I mean, these problems have been known. So if the problems were known before he even got into the deal, then wouldn't that kind of kill his battle that it was that Twitter was withholding information?
from a legal perspective, it actually might be a negative for Musk's case. From just kind of the general stuff that you can say and talk about, it makes it more complicated. And as you look closer, there's actually even more problems with the problem, or problems with the point that they're trying to make, in that the dates don't line up well with the case you would make about the contract, right? In terms of this came before. If that was the case, we could almost, and I'm not willing to do this here, but you could almost stipulate some of the accusations and say, yeah, it's not perfect. And a lot of these things are things that could be better and that you could make it better. In fact, if it was managed perfectly, if there were none of these problems, say there were 0 bots, and it was like, that's sort of a negative for Twitter's future, and that it can't be further improved. Why would you want to buy it and improve it if it was being run perfectly? And so reasons, including reasons that Musk put in the press release for announcing the deal, I think are salient. And if anything, this kind of points to further evidence that it matters and it's perhaps improvable. But one last point about this that I don't think that they're fair about in terms of my research, and one of the things when I'm trying to look at the strength of somebody's case, this is maybe the dozenth time or so that they've tried to say something about the contract, that if you spend 5 minutes looking at the context in the contract of the language surrounding it, that they've been highly disingenuous about what the contract says. And all you need to do is, so I would say, whenever Elon Musk or his lawyers say anything, read the preceding and the subsequent paragraph, and it frequently doesn't even approximate what they claim it says. I have a high level of confidence that this judge will in fact read the preceding and subsequent paragraph, and 1, will not reach the same conclusion that Elon Musk or his lawyers do, and 2, could get kind of pissed off that they think she's so dumb as to be quoted selectively and put off on some kind of wild goose chase. I think she might be about the last person in the world who would fall for that, but a lot of these things have been kind of stunts that are pretty easy to uncover. I'm glad I'm not trying that in Delaware court.
Definitely, I agree with that, and I think it's something that just shows more and more the Elon Musk lawyers still have an upwards battle right now.
Yeah, he might be one of the greatest geniuses in the world at winging it. I mean, he might be the winging it master of the universe, but winging it with his Tesla fans. That enjoy the process. They like the banter. You say something funny, you do a poop emoji, and they love it. I think that he's found an audience for winging it. They forgive him anything. And it's not just future predictions. It's past, present, or future. Like he can say, we're going to do this thing in 2 years and carve it in stone. I mean, it's always 2 years from now, and they love it. And I think it might be victimless in some way. It's not quite victimless. And nobody else is allowed to do this in terms of public capital markets. You go to jail. So, but it's just how the world works. He can do whatever he wants. The SEC doesn't care at all. He can say anything. He can manipulate stock prices. But it's kind of fun for the people who like it. And he has an audience for winging it. Delaware Chancery Court generally
not a fan of the winging it.
Everything I read of her doesn't look like she's a winging it fan. She's kind of a contract gal.
Staying to the line.
And she's kind of, I think she's extremely smart, but she takes that being extremely smart and then kind of focuses it on what the contract says and the reality of, and so I think the kind of winging it vibe that he does, I think it won't work, and it might even be counterproductive, but we'll see.
Well, thank you for coming on today, Chris. I appreciate your comments on a lot of topics here. And of course, the Twitter conversation is always going to be something that catches a lot of people's eyes. So appreciate you coming on today, Chris.
Thanks so much. Look forward to next time. Talk to you later.
Have a good one. All right, guys, we're going to go ahead and wrap on up here. We went a little bit of overtime, so do me the favor, guys, hit the thumbs on up. And what I really want you guys to go ahead and do is come on over to our next show, The Roadmap with Chris Ketchy. He has a lot of talk on Yacht Board 8 Club. I think he even has someone that has multiple Board 8 Clubs on today. So if you guys are interested in finding out what's the situation going on in the NFT space, Chris covers it all, not just on Board 8 Club, but on all the NFT space. And he's been covering a lot of what the NFL has been putting out on NFTs that have been going up in value. So go on over to Chris Ketchy, find out what he's talking about, and let me know what you guys think is going on in the NFT space at a later date. I'll find out, like always, because I will be on over watching my man Chris Ketchy. Come on over, guys. We'll see what happens.